Welcome to Gemini's Intro to Crypto webinar. And today's event will be hosted by myself. I'm Margaret. I'll do more of an intro in a second. And my amazing colleague, Willa, Zhao, and our special guest, Kiana Danial, author of Cryptocurrency, Investing for Dummies, and the CEO of Diva, as you can see on her shirt. If you're not already following Kiana, do yourself a favor, take a second right now, check her out on social, start following her. She has an amazing story. And we're so lucky to be able to tap into her expansive knowledge this morning. So today's webinar is more than just an explanation of crypto. We're going to learn why crypto emerged as a breakthrough technology in the first place, which necessitates a deeper understanding of what money actually is, the history of money, problems with our current monetary system, and how crypto might be a really exciting solve for those issues. So we'll break down some of the basics of Bitcoin, blockchain, Ethereum, DeFi, NFTs, the Metaverse, all the really exciting topics that are out there today, and the possibilities for the future of those crypto ecosystems. So I know I speak for myself and my fellow presenters here when I say I'm particularly passionate about providing education on these foundational concepts because crypto is for you. You can understand it, and we want everyone to feel less intimidated and more empowered and part of the crypto conversation and the opportunities that come with it. So at the end of this presentation, we're going to try to carve out time for all of your questions. So please feel free to drop those in the Q&A throughout this webinar, and we'll be monitoring them. There's no such thing as a dumb question. So if you're asking it, it probably means a lot of other people are thinking it. So zero shame allowed in this webinar. We're excited you're here. But before we get into the presentation, let's do some quick intros. So again, I'm Margaret Gabriel. I lead our learning and development program at Gemini.
Yep. And then I'm Willa, one of the product managers on our wallet team here at Gemini.
And I'm Kiana. I am an author, I guess. I don't know. I have a lot of titles. One of the titles.
Perfect. So we're super excited to unpack everything today. We'll start off with why crypto is important, and then we'll kind of dive into how to get involved, talk a little bit about beyond Bitcoin with Ethereum, DeFi, and altcoins, and then we'll reflect a little on crypto today and in the future. So again, we'll end with Q&A, so we'll be able to answer any and all questions. And there's also going to be a surprise announcement at the end of the webinar. So be sure to stick around, and then we'll kind of get started now.
Oh, I'm sorry.
I was like, yeah, all you.
Oh yeah, sorry. I didn't have the deck in front of me. So yes, you guys are in the right place because cryptocurrency, I know is down today. Some people are catching fear and they're like, oh my gosh, it's going to go down to zero. So I think we're doing this on a very, very good day because cryptocurrency is, in my opinion, a revolutionary way to get involved in the future. Now, I'll tell you a little bit about my backstory and the reason why I became interested in cryptocurrencies. So I actually learned about Bitcoin back in 2011. Somebody told me, hey, why don't you go buy Bitcoin? I was like, no, it's way too risky for me. And I didn't. Do I regret it? Yes. But at the time, I didn't even know what it was. So I don't regret it too much because it is important to make educated decisions. What I do regret is not taking the time to educate myself what Bitcoin was. And that's why I wanted to congratulate you guys for being here and educating yourself, because there's nothing more important than taking educated action. So once I got really learning about Bitcoin and diving into the research back in 2016, that I realized Bitcoin, what Bitcoin really represents and how it is going to help me have decentralized access to something that is not really related to one government. So the reason why I'm saying that is because I was born and raised in Iran, and back when the 1979 revolution happened, the government took over all of my dad's assets and froze his bank accounts. If cryptocurrency existed back in the day, my dad would have been able to keep something for himself. So that is one of the aspects of what cryptocurrencies represent. I am going to take 1 minute here because I need to bring up the deck over here. So if Willa can for a moment take over as I bring up the deck, that would be amazing.
Yeah, for sure. And I think we have the poll up. This is super interesting because I think everyone has their own reason for participating in cryptocurrency, and we can see that in the chat as well. Kiana shared a little bit about hers. Just before we kick off, I can share a little bit about mine in terms of investing as well. But you definitely want to be educated. So again, cannot emphasize that enough. My background came from traditional finance. So totally agree that a lot of this comes down to the value you believe cryptocurrency holds. Love to see the poll results. So want to share a little bit about what we saw from the poll. Looks like majority of people here, I'd say a little over 2/3 have bought some cryptocurrency before. A little third, the other third haven't bought yet, but considering it. So really great to see that. And then we have sold it on here as well, because all of us, I think in the learning process, have gone in and out of crypto, and then we've learned from kind of that process as well. All right, Kiana, let me know when you're ready, and then we can dive into why crypto is important.
Yes, absolutely. I am ready. So, okay. So the reason why, there are a number of different reasons why cryptocurrency is important. I would say the more realistic way to look at it is if we say, okay, if somebody asked you, back in 1999, is the internet important? Would you have said yes or no? But obviously at the time there was this debate. I remember vividly that people were telling my mom, oh, you should start sending emails. And my mom's like, what's wrong with the fax machine, right? So that's literally what we're seeing right now in the cryptocurrency and blockchain world. I don't want to call it, okay, internet 2.0, because it's a completely different approach to technology, but the cryptocurrency category is important because it is based on something called the blockchain that is here to solve a lot of the problems that we're seeing right now, not only with money, but also safety, and going back to the root of, for example, what is happening with our agriculture. We have blockchain technologies that are really honing down on understanding where our food comes from. So there are going to be so many, and there are so many different types of blockchains and cryptocurrencies that attack a lot of the problems that we're seeing today as a society. And cryptocurrencies are basically a byproduct of this thing called blockchain, just like email is a byproduct of this thing called the internet. And that's the reason why I think it is important for everybody to start getting involved and at least understand and educate themselves about what it is that cryptocurrencies and blockchains represent. So one of the main things that majority of people associate with cryptocurrencies is obviously money, because cryptocurrency, especially the ones that we're more familiar with, for example, Bitcoin, they represent some sort of store of value, just like gold used to do, just like our $100 bill does. For example, I have this $100 bill always for training purposes. Right? So what is even money? What is money? If I were to hold this $100 bill from here, this Mr. whoever his name is over here, if I were to ask you guys, which one is more valuable, a $100 bill or a penny? Which one do you guys think is more valuable? An important lesson here about money over here. Put in the chat box. We always get a penny in the chat, and the reason for that is why. Okay, really? Okay, really? If I give you a penny, will you give me a $100 bill? And I understand where you come from. The people who say penny is because they would argue that the material that a penny is built out of is a lot more valuable than this $100 bill. But what gives this $100 bill its value? It's the message that it carries, and it's what we as humans give value to. So somebody decided, hey, $100 bill has value. And then enough people believed in it that it is now a store of value. right? So this is what money is. Money is actually imaginary. Historically, money dates back to over 40,000 years ago. It's a medium of exchange and a measure of value or a means of payment, right? So that's why, for example, when Warren Buffett comes and says, oh, I don't see the value in Bitcoin because it doesn't have any extrinsic value. Well, I understand that you can't see or touch Bitcoin. At least you can see and touch a $100 bill, but enough people believe in Bitcoin as a store of value, and we're going to get into the inflationary values of it as well, that it actually gives it value, exactly like how we gave value to this $100 bill. And the misconception is that people think that this $100 bill is backed by gold. It is not. The Fed can literally print this out of thin air, and you and I would associate $100 worth of value to it. So this brings us to the new problem that we actually have with centralized monetary systems, is that the Fed can literally go and produce money out of thin air. Guess who cannot do that? Again, so right now we're bringing Bitcoin as an example because it's the one that majority of people are familiar with. But one of the reasons why, again, personally, hashtag not financial advice, I believe Bitcoin has value is exactly the fact that there's always ever going to be 21 million Bitcoins ever. 18 million of it has already been mined. A whole bunch of it has already been lost. So there's even less than that. And because enough people believe that Bitcoin has value, we're not even going to get into the blockchain, the fact that it's the most decentralized blockchain of them all. It is going to remain a store of value more so than gold. Why did I say that? So for example, which one? Okay, I'm going to ask you another question, you guys. Which one has more value, a bar of gold or this $100 bill? Getting gold here in the chat. We're getting a lot of gold. All right. So I'm going to play devil's advocate over here. All right. It really depends on who you ask. If we ask an alien who came from a planet that's made out of gold instead of dirt, if you show them a bar of gold and say, hey, like, give me like a bunch of your money for this bar of gold, they're going to laugh at your face. Because again, it really depends on who you ask and how much supply of it there is available. Now, when it comes to gold, the reason, again, I believe Bitcoin is more valuable than gold, again, hashtag not financial advice, is because we never know how much more gold is left in the planet. We could get hit by an asteroid that is like purely made out of gold, and they're like, there will be more than enough gold for everybody, which at the same time will bring down the value of gold. And for those, for example, again, if I ever met Warren Buffett, this is what I would argue with him. I was like, all right, so you're debating that Bitcoin doesn't have any intrinsic value. Okay, what gives gold its value? It is just a shiny kind of dirt that is heavy, that is very slow. Nobody actually goes to the grocery store to buy some lettuce with gold. It is just a store of value because we, the people, give it value. So that is money, just in a nutshell. And the reason why, when enough people associate a certain value to an object or anything, it gives us value. That's where value is derived from, the message that it carries and supply and demand. So again, that was just a little bit about it. I would be more than happy to answer your questions at the end of this, but I mainly just talked about Bitcoin right now. I wasn't by any means trying to sell Bitcoin to you guys. I just wanted to give you the understanding why even Bitcoin has value, even though we know, some of you might know that Bitcoin, the blockchain, actually has some problems. So I just wanted to clarify that. But the blockchain technology, this world, doesn't end with money, doesn't end just with the monetary issues, doesn't end just with the inflation issues that we're having with our current currency, the fiat currencies right now. cryptocurrencies solve a lot of problems, not just with the monetary system, but actually we have a bullet point over here, but also with other categories. So one of the main issues that we have right now in the world, if you're not, and even if you're in the United States, there are so many people who are unbanked or underbanked. They don't have access to banks because they don't have Social Security, because they have some sort of issue. So the blockchain, the decentralized blockchain, cuts that middleman, cuts the banks, cuts the broker who get a commission based on every transaction that you make. It is a peer-to-peer, and we're moving towards that direction. How do we know that? We were already moving towards that direction with Uber, Airbnb. This is where we're moving towards. We're going from centralized entity holding everything, like this big chains of hotels, to peer-to-peer, Airbnb, everybody like lending each other their houses. The same can be said. It's kind of similar when it comes to the blockchain technology because it's peer-to-peer. It's me and you with no other middleman in between. We're serving the unbanked and the underbanked. Again, this may not be as visible in the US, but again, there are a lot of people in the US who don't have the documents and they cannot open a bank account. But with cryptocurrencies, they can actually get involved in the economy and make a living for themselves. This is even more valuable when you look outside the first world countries where I'm from, and where like the people are hit by the sanctions because of whatever their crappy government did, right? Now, this is bringing an opportunity for those people to get involved and actually participate in the global economy. Elimination of inflation, we already talked about that because of supply and demand, because there's only ever going to be a certain amount. A lot of cryptocurrencies have that in place in them, some other they don't. So we're going to talk about that as well if we have time. But there are certain cryptocurrencies such as Bitcoin that eliminate inflation. And what really gives me the passion to educate people more about this is the fact that it does give people power to control. So our motto at Invest Diva is take control of your financial future. Now, of course, cryptocurrency is not the only way that we do it. Again, I want to be completely clear over here. I didn't become a millionaire just by cryptocurrencies. I have other things that I do to take control of my financial future, but cryptocurrency is one method to consider to take control, to be in control of your own money, and without giving all the control to one person, to a money manager, to a government, to a bank that unfortunately majority of times become corrupt.
Can't emphasize enough the point that Kiana made about understanding what you're investing in. And Bitcoin can feel really confusing. It can feel intimidating. There are words involved like nodes and cryptographic hashing, and we can easily walk away from things we don't understand. So we're going to help solve for that today so that you all can walk away really understanding at its core what Bitcoin really is. And that's the $1 million, or I should say, I think the last time I checked the price, $37,800 question. What is Bitcoin really? So what's so cool about Bitcoin is that it's both a form of money and a technology. So think about that for a second. So Kiana just talked about the $100 bill or the dollar you just spent to go get your coffee, right? Those really just represent your faith, our faith in the US economy. Again, not even backed by gold. The paper dollar itself doesn't do anything technological. It's just a paper dollar. Imagine instead a currency that allowed you to transact to go get that coffee, but also represented technology that is solving a big problem in the world, which is this over-reliance on third-party systems. So Bitcoin is money, meaning it's a store of value, it's a medium of exchange, and it's a unit of account, meaning it's divisible into different denominations, just the way a dollar is divisible into quarters and dimes and pennies. But it's also the first manifestation of this revolutionary blockchain technology that it runs on. And it's a technology that allows people all over the world to transact on the internet in a decentralized way. Decentralized meaning there's no central entity that's allowing the transactions to occur, like a bank or a government. And that solves that over-reliance on third parties. So we often see Bitcoin represented as this iconic orange coin on this slide and in this drawing behind me. But I want to be clear for a second. Bitcoin is not an actual physical coin. It's the first digitally native money made for the internet. So we have to, again, to zoom out, understand that Bitcoin is both a form of money, like a dollar, that can be sent from person to person or can settle a transaction. And it's a technological innovation. And we call that decentralized network or protocol that allows individuals to send this money to each other, the Bitcoin network, spelled with a capital B. When referencing Bitcoin as a form of currency, for example, I paid for my car with half a Bitcoin, it's spelled with a lowercase b. And speaking of paying for things, there's a very common misconception that you need a lot of money or capital to participate in the world of Bitcoin. And we're here to tell you that that is not true. So yes, a single Bitcoin is expensive, right? The price is high. But just like a dollar, like I said, can be divided into cents, one Bitcoin can be divided into smaller parts. So you don't have to buy a full Bitcoin. You can buy $5 worth of Bitcoin if you want to start investing or trading. And you can do that on an exchange like Gemini, for example. And speaking of how much Bitcoin costs, to understand the price of Bitcoin, we need to make sure we all understand how price really works, with which Kiana just alluded to earlier. Why does something cost what it costs on a particular day? And we've seen Bitcoin move price a lot, and that can be a little confusing. So just like the stock market, or like the currency exchange booth at the airport, or like the milk in the supermarket you bought, or the gas you put in your car and paid for, the price of an asset is determined by that supply and demand. So if the demand for Bitcoin, everybody wants Bitcoin, and that outweighs the amount available of Bitcoin to buy because people aren't selling it, that means that the price will go up because Bitcoin has now become scarce. If more people are selling their Bitcoin, and then now it's flooding the market, the amount of Bitcoin available for purchase increases, which means the price is going to go down because that demand has gone down. Scarcity or perceived scarcity is a big driver of price, not just of Bitcoin, but of most assets. And here's another and critical way to think about price. When you're looking at the current cost of Bitcoin at any moment in time, or any other asset really, what you're actually looking at is the last price that someone was willing to pay for that Bitcoin. So if someone just bought a Bitcoin for a price of $37,000 and $37,700, that's the price. So put simply, the price of a thing is what someone was just willing to pay for it. That's it. Exchanges like Gemini are constantly matching up buyers and sellers of Bitcoin and helping them agree to a price that they can transact. So they're a really good place for you to monitor the price of Bitcoin and other cryptocurrencies that an exchange like Gemini lists. So we've been talking a lot about Bitcoin, which of course was the first cryptocurrency, the most popular in the crypto system. But most of what we've been talking about, decentralized systems, price, money that solves a problem, applies to other cryptocurrencies too. And later on, Willa is going to walk us through a lot of really cool applications of different cryptos out there, and Kiana as well. But what's important to know is that each of these cryptocurrencies has different features and different capabilities and is trying to solve different problems, like Ethereum, for example, which we'll dive into later. And it can be really easy to confuse the terms Bitcoin, cryptocurrency, and blockchain. So let's clear that up. Again, we want everyone to feel super comfortable with these terms. So like Kiana said before, and I'm going to steal her metaphor because it's a really good one, the blockchain is the underlying technology that cryptocurrencies like Bitcoin run on. So you may have heard the blockchain referenced as a public ledger of transactions. And that's just a fancy way of saying that anytime a Bitcoin transaction takes place, the blockchain technology underneath it is recording and listing every single transaction publicly. So anybody with the right computer can see that entire list of transactions that are listed publicly on these blocks. And again, anyone with that computer can get access to the network and start participating, adding their own Bitcoin transactions onto blocks. And what's really, really amazing about blockchains is that they're maintained by those participants, not a central third party. And the technology used to send transactions from one person to the other is also doing something else really important. It verifies that the transactions are legitimate. So because of the way those blockchains are designed and programmed, it's virtually impossible for a transaction between two parties or two people to be completed if it's fraudulent, incomplete, or illegitimate. Only legitimate transactions confirmed by the blockchain technology and its participants are added to those blocks. As the network confirms and then lists more and more transactions, those blocks get chained together, hence the term blockchain. And those transactions are fully encrypted, which heightens privacy and security on the network. These transactions are taking place globally in an entirely digital and borderless way. So no more walking into Bank of America. And in this system, people, right, those network participants like you and me, if we wanted to, we have to trust the blockchain protocol and the underlying technology, but we don't have to trust or even know each other. So when we zoom out, Bitcoin is just one type of cryptocurrency, like the US dollar or euro is one type of global currency. And all of those cryptocurrencies are running on this underlying blockchain innovation. So again, I'm going to use Kiana's apt metaphor here. Blockchain is to the internet as Bitcoin is to email. Emails are exchanges of information that are built for and reliant on the internet. Blockchain is the underlying tech that allows for and logs cryptocurrency transactions. And there are all kinds of blockchains being created that are trying to solve these really meaty, important world problems using this decentralized network. There are blockchains that are exploring ways to improve supply chain issues, real estate, voting. Imagine a world with no more recounts, and tracking intellectual property, right? Who actually owns the rights to a song or a piece of art? So to wrap up on defining terms here before I turn it over to Willa, I'm going to quote a venture capitalist named Adam Draper, who said that blockchain does one incredible thing. It replaces third-party trust with mathematical proof that something happened. And the repercussions of this for every industry are huge and super exciting.
Sweet. Thank you, Margaret. So let's put some of these concepts together that we've just heard. So overall, Bitcoin is global, digital, and decentralized. So cryptocurrencies like Bitcoin are not backed by a centralized government, and their price is set by buyers and sellers. Because they're held digitally, you can send money around the world in seconds or minutes for very small amounts of money, in some cases pennies, depending on the cryptocurrency and network. And you also don't have to worry about wire fees or exchange rates. So even the other day, our team was pulling together funds to purchase a group gift. One of our team members was in Spain, and the fastest way to contribute to the gift was to do a crypto transfer. So all throughout our exchange ecosystem, he was able to send me the funds to my wallet, and I saw them confirmed in minutes, which was super cool. And finally, cryptocurrencies are not controlled by any authority, which we've heard. So money sent between two parties is verified, again, by what's essentially a spreadsheet in the cloud. So the spreadsheet is powered by an entire network of computers, all solving mathematical formulas to confirm that a transaction has happened and the money has moved from point A to point B. So rather than trusting any authority, it's really the math and the formulas that govern and prove and protect essentially the blockchain and Bitcoin network. And you can see and verify all these transactions publicly. And that technology is called the blockchain. So you can go to a blockchain explorer, just pull up Chrome, and you can actually take a look yourself and see all the transactions that have been confirmed and happened. So blockchain explorer is something you can dig around into. All right, so that was a lot about what is Bitcoin, what's blockchain, et cetera. The next big question is, how do I get involved? It may seem daunting, but it's actually fairly straightforward. So let's get a little bit into that. So first, why should I get Bitcoin? We've learned about it. And I'm not here to tell you why you should get Bitcoin, but hopefully we're leaving you with some principles on how to think about it. So we'll let you formulate your own opinions, but consider, is there untapped potential? Is there a future use case beyond what it's being used for today? And ultimately, prices are determined by the principles of supply and demand. So if you think about it this way, it can help drive your decision to participate or not participate in the Bitcoin ecosystem. So to touch on a few reasons people get involved in crypto, just to stimulate your thinking, is to use it. One, similar to the example I gave, it is a globally transferable asset. So across borders, you can send and receive in minutes, kind of like my earlier example. If you believe in the mathematical fairness of the Bitcoin network, and say you don't have faith in the government, in your local currency, there's all sorts of theories in which you may want to essentially play into the mathematical fairness. You can support Bitcoin in the project since it is all based on mathematical formulas. Another view is as an investment. So we talked about it as a store of value, etc. So personally, prior to this role, I was a fixed income trader, as antiquated as the markets get, but a lot of it is based on value. So I really believe in investing, and this is the one that resonates the most with me. I personally choose to buy and hold crypto as a longer term investment because I'm investing in the projects, teams, and uses of some of the networks. I would compare this to value investing within the traditional finance markets. And finally, there's always going to be speculation. There's a lot of speculation still in the crypto markets. The price of Bitcoin has a reputation for swinging up and down wildly, and that's called volatility. And so it's because the world doesn't agree on how much Bitcoin should be worth. So while there's volatility, there's often activity in the markets driven by market participants and speculative actions. So cryptocurrency volatility is also an exciting area to many people, and to play and to watch as it stabilizes over time is something that's very interesting too. So now let's talk about how to get Bitcoin. So Bitcoin has been our main case, but similar to how you get Bitcoin, you can apply it to obtaining any other cryptocurrency. But there's actually a lot of different ways you can buy or obtain Bitcoin. The first category is to buy it. You can buy it from an exchange like Gemini. You can also go to a Bitcoin ATM where you can exchange directly cash for cryptocurrency. And finally, you can actually buy it or receive it as a gift from other people. So kind of this exchange from person A to person B. Second, you can earn cryptocurrency in Bitcoin as well. So you can be compensated in Bitcoin, or you can earn Bitcoin by mining. However, Bitcoin mining is becoming exceedingly difficult, and it does require a lot of very expensive hardware. So I wouldn't say it is the easiest to get into Bitcoin by mining it. Generally, the safest thing to do with I would say the most user-friendly setup is to buy it on an exchange right now. So exchanges will allow you to create an account and use our US dollar or any fiat currency to purchase various cryptocurrencies. And so next, let's talk about where to store it. I think this is another huge question. So say you buy your crypto or you obtain it from one of the ways above. A big question is, where do I keep it? So the place you keep your Bitcoin is often called a wallet. In this world, it is a digital wallet. However, that wallet can also be a physical device or a phone app or an online service. So it may seem confusing because there's a lot of different ways, so let's break it down. I would put storage of Bitcoin or cryptocurrency into two main categories. So the first category is kind of self-storage. So you can store it yourself. So using a phone or a computer app, or even a special device or hardware, you can actually store your crypto yourself. What that means is you are essentially protecting your special password or key to spend Bitcoin out of your address. So if you're storing Bitcoin yourself, you and only you have access to that password to your address. You're completely 100% in control with what happens to your Bitcoin. But on the flip side, if you lose that password, you've essentially lost your money and that control. So the second option is to use a trusted online service. So Gemini or others provide wallets to help store your Bitcoin or cryptocurrencies for you. This ends up looking and feeling more like an online bank account, a Venmo, a Cash App account. So I personally tend to recommend this option, and I can tell you that here at Gemini, we invest a ton of money into the best security experts to essentially protect your password and your key. And I trust that personally over keeping a piece of hardware in, say, like my desk drawer. But those are kind of the two options, pros and cons. One isn't necessarily better than the other, but it's more which is suitable toward you. So I hope this is helpful with how you can get involved. And again, we're happy to answer questions at the end on how you can actually approach this daunting industry. So from there, Margaret, let's take it a little further.
Yes. Okay. So beyond Bitcoin, super exciting. So I think Kiana early referenced like early days of the internet, right? So if we imagine when we started the internet 20, 30 years ago, we had Ask Jeeves and AOL and Yahoo, and look how much innovation has happened from the early, just beyond and sometimes eclipsed some of the early movers. So we want to have Bitcoin is a great way to understand the foundations of what we're talking about here, but we also want to open your mind into like what Bitcoin is helping unleash in the world of decentralized networks. So we have Bitcoin, of course, but there's a lot of other really cool cryptocurrencies to talk about. One of them, I think that's important for us to chat about is Ethereum. So we often hear, maybe the second most popular crypto you're going to hear about is ETH, Ethereum. Remember, Bitcoin blockchain is primarily built for payments for that store of value. Some people call it a digital gold, for sending Bitcoin with a lowercase b to each other on the network or people who are participating in the network. And Ethereum can do that too, but it's also solving for some really interesting problems using its underlying Ethereum blockchain. And engineers on the Ethereum blockchain have built these programs, which you'll often hear called smart contracts, that run on that Ethereum blockchain. And I want you to imagine a contract that didn't require a lawyer or an expensive third party to understand or to enforce those contract stipulations. So with a smart contract, the conditions of the contract are pre-programmed using those programs. So, and only when those conditions are met will the underlying transaction occur. So think of smart contracts like a vending machine, right? Think about you're going to a vending machine, you input money, you put $1 in, you make that A2 selection, let's say, and then you get Lay's potato chips, right? Only by putting in the right amount of money and making the right selection do you get those Lay's potato chips that you get to go grab. There's no person who hands you the snack, right? A smart contract is kind of like a vending machine on the internet. It has logic programmed into it. And like how a vending machine removes that need for a vendor, smart contracts can replace intermediaries like lawyers, right? And third parties that we pay a lot of money for and rely on for those contract stipulations to take place. And anyone, just like anyone can participate in the Bitcoin network, if you have the right computer, the right programming, anyone can write a smart contract and deploy it to the network. You just need to learn how to code a specific smart contract language and have enough Ethereum, often referred to as gas, to deploy your contract. Or you can just participate in an exchange like Gemini that'll help you get access to some of those really cool Ethereum assets that are trying to solve some of these interesting problems. So through this groundbreaking combination of features like smart contracts, Ethereum, if you don't know enough about it, I see people on chat saying, Google, 100%. There's really cool stuff happening on the Ethereum blockchain, and it's being used for a variety of innovative decentralized apps, often called DApps, in finance, web browsing, gaming, advertising, identity management, supply chain management, and all those applications and ideas that are running on the Ethereum blockchain are like different cryptos or tokens that you'll see out there. And Willa's going to talk about a few of those that are really exciting, and Kiana as well.
So what are people doing with cryptocurrencies today? We talked a little bit about, how it is kind of a new way of exchange and money, but there's so many different things that is happening in the cryptocurrency world as a whole today. Some of the things that you may even have heard of. And they may sound a little bit intimidating, but don't get caught up in the words and the intimidation. Some of the things that you may be hearing thrown out is DeFi, decentralized finance. We have NFTs, non-fungible tokens. We have Metaverse. All of these things happening thanks to the advent of the blockchain technology. And I think Margaret is going to dive a little bit deeper in these, or where I can just talk a little bit about it. But so what decentralized finance basically does is a peer-to-peer financial service and technology built on a blockchain. Now, Ethereum is one of the most well-known ones for DeFi, but it is huge. And there are so many up and coming projects also that are I would totally recommend that you guys go and do your due diligence and go on Google and just go down the rabbit hole and see what projects are happening in DeFi. One thing I do want to warn you though, right here before we get into the next step, I cannot help myself, but is that you also want to watch out for scams and people pretending to be something else just by attaching, hey, we're a DeFi business, come give us your money. So obviously, I think you are educated enough to not do that. And every time that you go and learn about a project, you want to actually go and verify that they are legitimate and they actually have real potential to grow. Another form of cryptocurrency that is becoming super popular right now, you guys, how many guys have seen that sad ape thingy going around? So those are non-fungible tokens. Where non-fungible tokens are they're basically units of data stored in a blockchain in form of a digital ledger that can be sold and traded. Kind of like, back in the day, I mean, still people like trade art. Now you can trade unique art through the blockchain technology. So the same way that the original Mona Lisa is way more valuable than the one that I printed with my printer on my in my house today, the original non-fungible NFTs, non-fungible tokens, now can be stored digitally and people can trace it back and understand what the true value of it is. So it's again another way to get involved with cryptocurrency. So you don't have to be a mathematician to get involved. You can be an artist and get involved in the cryptocurrency market. Last but not least, we obviously have the Metaverse. It is becoming so big that Facebook literally changed their name to Meta just to be, with the cool kids. But so what Metaverse is, again, it can get lost in the, oh my gosh, what is the Metaverse? It's basically an immersive virtual world. It already kind of exists if you're into gaming, people who do immersive gaming. It's kind of that, but is now again backed by blockchain technology and cryptocurrency. So you can now actually exchange your cryptocurrencies within that metaverse. So it is the way the world is moving, and blockchain and cryptocurrency is basically in front and center. So these are the things that you again want to add on to your list of research. Now, I think Margaret wants to summarize.
Yes, Kiana, before I do, can you shared something when we were prepping for this around how to help people think about which tokens to buy? I think you made a comparison to equities.
The stock market, 100%.
Yeah, can you share that with people? I think it would be so helpful.
Absolutely. So, all right, I'm the CEO of Invest Diva, and what we do is invest. All right. So, and I don't just invest in your cryptocurrency market. I invest in the stock market. I invest in myself. I have a business. I invest in my business. And this is how I go about investing in general. And I found out that you can apply the same exact investing principles to the cryptocurrency market. So you can make it super complicated, or you can go back to basics. There's no need to reinvent the wheel when it comes to investing in the cryptocurrency market. So my methodology of investing is what Willa actually mentioned before. I am a value investor. What is a value investor? It's basically the Warren Buffett method of investing. Now, again, we're fully aware that Warren Buffett doesn't invest in cryptocurrencies, and for good reasons. He doesn't have the risk tolerance for it. Like, everybody's risk tolerance is different, and not everything is suitable for everybody. For example, you cannot pay me enough to get involved in real estate. It's just because I just don't want to. It doesn't mean that there's not money in it. It's just, it's not suitable for me. So the way that I invest in cryptocurrencies is that I actually see them the same way I invest in the stock market. And how value investors invest in the stock market is looking at it in two different ways. One is that you can go after category kings. What are category kings? Is when we say the name of the category, that particular project or company or cryptocurrency pops into your head. So I'm going to take a test over here. If I say search engine category, what name pops into your head? Type in the chat box, Google, there you go. If I say social media, but Daryl is like, if I say social media, we're getting TikTok over here. It could be shut down soon, but Facebook, right? So if I say cryptocurrency, right? I'm guessing Bitcoin. There you go. So that is a category king. So one of the easiest ways to get involved as a value investor is to go with the category kings. Now, of course, category kings sometimes the growth can be, can slow down. So it is a safer way to go about value investing, but risk and reward is always correlated. So if you are the kind of person that wanted to take higher risk, you can then go with growth value assets. Now, these are the ways that you can identify growth value assets that are valuable enough for you to hold on to for a long time. And this is how we do it. Again, both for stocks and cryptocurrencies. You go with a project, a blockchain, or a company that improves life, that solves a problem. You go with a project that is doing something good for the humankind, that is helping us do something better, faster, or cheaper. So if they have these characteristics, and on top of that, it has a good community or a management team behind it, then you know that this is going to be valuable in the future, 5 years from now, 10 years from now. If you are a value investor, I would highly recommend that you look at it, not just from today, oh my gosh, Solana is down, this project is down, that project is down, what am I gonna do? Look at it 5 to 10 years from now. If that project is solving a real problem for the humankind, there's a very good chance that it's going to stay long enough for its assets, whether it's stock or cryptocurrency or token, to gain value in the future.
Beautiful. Thank you. I just love that. I think it's such a nice comparison for people to bridge that gap. And I will say too, with NFTs, you can be somebody who wants to participate and buy them, or you can mint them yourself. I want to normalize that. I do that myself. I'm an artist. This is one of my NFTs. I mint them on the Polygon blockchain. So I really want to underscore this idea that this world is for everybody, which is why it's so, so exciting. So to wrap up, and then we'll have a couple of minutes, a good 10 minutes for Q&A, which is perfect. Couple of things, right? We talked about a lot today. So we will have the recording, I think. There are also so many areas for you to keep building your information and knowledge. This could just be one step in that direction. But cryptocurrencies are both, right? A new form of money and an exciting technology with no central authority. There are a lot of different cryptocurrencies. We talked about a few. The most famous are Bitcoin, of course, and Ethereum, which talks about our smart contracts, and it's the building block for DeFi, which has all these really exciting applications for myriad of industries. Blockchain is the underlying tech, right? Bitcoin and Ethereum run on blockchains and represent those first mainstream manifestations of blockchain's potential. There could be many more that come out in the impending decades. You can get some crypto, like Willa said, at an exchange. You get a Bitcoin ATM if you can find one, or by earning it, by mining. We didn't go into mining today. That's a whole, maybe we'll do a version 2. That's a big topic in and of itself, but I think the foundation's first. Once you have it, you can use it, right? Bitcoin or other crypto to invest, to hold, if you really see in its long-term growth and value, or to trade on exchanges like Gemini to invest in other cryptos. You don't need a lot of money to get into crypto. So I encourage all of you after this call to go ahead and consider getting started with as much money as you feel comfortable. Again, no investment advice, but whatever you feel comfortable with to help you be part of the conversation. But most importantly, keep learning, keep attending webinars like these to boost your confidence. You are 100% smart enough. You don't have to be an engineer to be in this conversation. And speaking of getting started, as Willa promised in the beginning, we are offering the audience a promo, $20 worth of Bitcoin for new users on the Gemini exchange when you trade $200 USD of crypto on Gemini. And the promo is available to US, UK, Australia, and Hong Kong users. But with that, I'll turn it over to the chat. Kiana, we can dive into anything you want to answer. There's a bunch of really great stuff on there, but if people want to start asking questions, we can start to tackle them in the 7 minutes we have left.
Absolutely. I just saw like a bunch of really good questions. Hold on. Like we're getting questions about when to buy. All right. So Can you explain how one makes a profit, please? All right, let's tackle that. All right, let's tackle that because we are in it. Majority of times it is for the money, and that's a good thing. First of all, I don't want you to feel any shame asking us about how to make money because that's what it's all about. Money does bring happiness, by the way. If I didn't know that, I went from $0 to $5 million, and it feels a lot better to have more money. All right, so how do we make money? So one of the ways with cryptocurrency or any other kind of investment, the first thing that you need to understand and do is to understand your risk tolerance. Because the way that I used to invest, for example, back in the day when I was single, when I didn't have a daughter or a family that really concerned me, I actually had a higher willingness to take a risk, but lower ability because I didn't have any money. So there is a very fine line when it comes to taking a risk. Now, when there are two different ways you can go about actually making money in any kind of investment. They're both under the umbrella of compounding. What is compounding is when your money makes more money and the money that your money makes more money. All right. So one of the ways that you can compound within the cryptocurrency market, which is actually very delicious because of the volatility, is the art of buy low and sell high. Again, this is nothing new. We're basically doing the same, applying the same exact principles that used 40,000 years ago and in the stock market, now again in the cryptocurrency market. And the markets move because of us, because of our psychology. So again, no, you don't have to become a math whiz in order to take advantage of the volatility. You need to become a very, very good people's person. You need to understand other people's psychology, what they're doing, why the markets are dropping. And if you have trust in the project that you have chosen based on your fundamental analysis that we talked about, picking a category king or a project that has huge growth potential, then you can take advantage of the market downturns. So one of the biggest things that I always say is that actually market crashes make the most millionaires. Is one of the ways that I actually made my first million. It was back in 2020, the market crash. And instead of panicking, I bought and I rode the upturn. But again, I cannot stress enough that you don't want to just go and buy any project. Your confidence in the project is way more important and valuable than anything that you hear here in this webinar or on Twitter. But you actually have to become confident in the project you're investing in, and confidence only comes from learning and taking action. Because if you just learn and you don't have skin in the game, if you haven't actually invested any money, you probably are not going to learn. So the compounding comes from buying low, identifying key psychological levels, going against the crowd, and then selling when everybody's super excited. Like when everyone's like, oh my God, to the moon, that's the time to sell. But again, FYI, I don't do that kind of compounding anymore because now my business is making more money than that kind of compounding, which is a little bit higher risk. And again, I'm a mom, so my risk tolerance has gone lower. So I can compound a different way. But one of the main ways they can compound within the market is buying low and selling high. I hope that answered your question. Let's see if there are any other questions over here. How to become a successful NFT artist. I think Margaret would know that.
I don't know about successful. I'm just getting started myself, but I encourage you to check out, Gemini actually has a NFT exchange, Nifty Gateway. Take a look. You can see all of the amazing things artists are doing. You can filter by price. You can buy and sell NFTs and art just the way you could buy and sell Bitcoin, which is really cool. So it's not just about owning art. It's also about seeing if you can make more art by buying and selling it. You can tokenize art and own part of a project. It's just completely redefining how we think about art, which is super cool. And then I would say, just like anything, get started. If you're an artist and you want to start minting your art, you can do that really easily on exchanges like Nifty, and OpenSea is another very popular exchange. So just like we're doing today, go read about it. There's so many webinars and podcasts that you can start to get educated on NFTs, non-fungible tokens, and just how it's reimagining the art world. Really cool stuff. Kiana, one thing I thought could be interesting that you mentioned earlier is the inflation piece. So somebody asked a little bit about how inflation rates are going to potentially affect Bitcoin, which I don't think they will, but maybe just diving into like the Fed interest rates and why Bitcoin is kind of inflation resistant, I think could be interesting for people too.
Absolutely. So what is inflation doing right now? So what is inflation? First and foremost, inflation is basically the reason why your parents paid 50 cents for a gallon of milk and you have to pay like $5 or $2. That is inflation. It means the value of this $100 has gone down throughout the years. And now with inflation at 7%, what this really means is that leaving this $100 on my desk or leaving in the bank, it basically kind of means like setting it on fire because it is devaluing. So the way to combat inflation is to invest in projects that are going to or are projected to grow at a faster pace than the inflation. So 7% inflation, what has been growing more than 7% in the past year? I wonder, like even with Bitcoin and other cryptocurrency projects down to the level that they are right now, if you look at it, if you compare it to 3 years ago when I just got started with Bitcoin, Bitcoin was only $3,000. And now on a down day is $38,000. Would I have been better off keeping my $100? I mean, it was more than $100, but my money in the bank, or would I have been better off investing it in something that has growth potential? Now that is one element of it. Now the reason why Bitcoin kind of is inflation resistance is because of the supply and demand thing that we talked about at the beginning of this webinar, and is the fact that there's only ever going to be 21 million Bitcoins ever. So the supply is limited. The supply of money or some other cryptocurrency projects are not limited. So if you are investing specifically because you want to hedge against inflation, you might want to look into projects that are inflation resistance, which means they are lower in supply and higher in demand. More people want it and there is less of it. I mean, again, if you wanted to put it in other terms, so for example, I have a mentorship group that I only get like 11 students per quarter, right? But then we have another one that we can get as many as we want. So of course, the other course that we can get as many as we want, but I'm less involved, it is much cheaper than the one that I only work with 11 people because my supply is lower and the demand is higher. I'm oversubscribed, right? So that is the way that you can go about inflation. So basically, we're 12:01. I'm going to recap. One thing, if I may, because a lot of people are like, where can we learn about this? I did write the Cryptocurrency Investing for Dummies book, and it's on Amazon. It's all the basics.
Awesome. I'm actually gonna drop your, I wish I could drop it in the chat. I want to look it up and snag it for you, but just look up Kiana. Again, I encourage you, follow her on her socials, buy her book. She's amazing and definitely a testament to somebody who normalizes the fact that you might not understand it right away, but it's absolutely for you. The space is for you. Check out more webinars like this if you can. Hear from other people, not just us. Get yourself educated and start to participate, join the conversation. You can do it with as little as $5 or just getting started. So thank you for everybody who joined. I think we will send out the recording. We'll check in with Gemini folks, but Willa, Kiana, anything to add before we close out?
Don't fall for the cryptocurrency mistakes. Actually, one of the best ways you can go, I'm so wary of that because there's so many scams out there. We just talked about like the shiny and the rainbows and the unicorns today, but there are obviously some downfalls. I have put together 7 biggest, deadliest mistakes I've seen new cryptocurrency investors make. So you can just go to cryptomistakes.com and just download that PDF. So it's cryptomistakes.com. Download the PDF. I actually even have a presentation there about all of these like things to watch out for when you're getting involved. And I think people were having a question about if Gemini charges for holding.
Willa, you want to get into that about fees, etc., before we part?
Yeah, for sure. So I know I saw a lot of questions around holding versus buying. So in terms of holding on Gemini Exchange, your exchange wallet, you will not have to pay any fees on the balance that you hold on the exchange wallet. A lot of this will be based on transactions. So when you buy, you incur a fee when you buy, and that's mainly to cover the network fees. So if you think about it, anyone who's validating, mining, doing these confirmations, it's essentially your payment toward that network. And so I would say, let me know if you have any other questions offline. Hopefully we can cover this in 201 too, and we'll go more in depth on fees.
Love it. Yes, right. So you don't have to be, you have to have that special computer, a lot of power and money to actually mine Bitcoin yourself and be in the network. And Gemini and other exchanges act as an intermediary for you. So you can participate in the network, invest in crypto without having to have that special computer, etc. But you pay a fee for that service, essentially. But I know we're over. We're going to jump. Follow us, reach out to us. Please open an account if you don't have one. But most importantly is just to get started and join the conversation. And thank you for everyone for joining all over the world. This has been a blast. And thank you, Kiana, for joining us and taking the time.
Of course, this was so much fun. I hope this is valuable to everybody. Go write up the bullish run, I guess. I don't know. Hashtag not financial advice. I have to say that.
Buy Kiana's book.
All right, you guys. Have a good one.
Take care, everyone. Bye-bye.
Yeah.